Good afternoon, traders. This is Christian from Market Trade Group, and today is Thursday, June 17th. So we've got one more day of the week. A couple themes of the day jumping off the page here today. Huge rotation back into growth areas of the market. The Qs made a new high for the day. Overall, breadth was a bit weak. We're going to cover some of those topics. We'll go through some charts in this video. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through here is for education purposes only. If the screen is a little bit blurry, just give it a second. YouTube takes a while to render the high definition video, so just give it a few minutes or maybe a half hour or so, and that should be rendered. Let me zoom in a little bit too for the screen here, because I must have been zoomed out here for a minute. But let's go over the raw numbers. So S&P actually finished down on the day, down 4 basis points, but did rally in the throughout the session. Just a touch, but from where we were in the overnight market, right? It seemed like there was a bit of negativeness, that the markets were selling off a little bit more after the Fed meeting, and it's just amazing what the difference of 24 hours or even 12 hours makes in this market. A little bit of doom and gloom last night. Also, I was making this comment in the TTG pre-market session. We start our day every day, at about 7 o'clock here at Tribeca Trade Group, and we have a live Q&A session which starts a little bit after 9 o'clock, and I go over some of the themes and just some of the things that kind of shock me, or that I think are just kind of tough to basically just deal with on a day-to-day basis, and that's the noise that we get on a daily basis. I listen to a couple programs in the morning, and a couple of one of them, before I even look to see where futures they're talking about how the market is down big overnight, and I look and I'm like, oh geez, are we down like 1%, 1.5%? No, we're down like 30 or 40 basis points. So I think some of these things you really kind of have to just kind of continue to kind of try to tune out the noise every day. As a reminder, markets go up, markets go down. We are right now in the middle of June. This is a weak seasonal period of the year, and so far it's not bad. There's a lot of rotations going on basically almost every day, so it is a bit tricky to trade. Tricky is the word that I've been using. So you kind of just have to be aware of your your trading size, how many positions that you have on, as we're in a weaker time of the year, and just be cognizant that we might get a correction at some point. But for now, we're just basically seeing rotation, right? So we talked about the S&P basically flat for the day. Here was the big performer of the day, which was Nasdaq, which again started in the red, managed to rally about 1.6% over the session and finished up 1.3%. Small caps, on the other hand, they basically sold off through the session, so they finished down 1.1%. Some underperformance there. Right, and we're lagging today. So again, a lot of rotation going on here. The microcaps were down 1%. The bonds were also, I should have that in the theme here, because big move in bonds. So here's another one. Big move in bonds, right? With the Fed meeting yesterday, I kept hearing about bonds. Oh, geez, they're really selling off. They're selling off. They were down like 20 or 30 basis points yesterday. Such a small move, right? Now, granted, they did start the day higher yesterday, but they finished lower for the day, but I just heard about them all day during the Fed meeting, which I understand. Bonds are one of those things to kind of watch. The dollar is something else to watch as well. But today was such a large move. At one point, I think TLT was up like 2.4%, which is a huge move for bonds. You could see, the candles, you don't have that usually big of a range. So But I heard very little about this today, about how much the bonds were moving, and I think that really impacted, a lot of things today. But here we are, and this is the highest we've been in bonds basically since February. So, we did get out of the value area, which means we're starting to trend higher. We did this back in the beginning of the month and just have been going pretty decently. So that impacts a lot of things. The other thing I wanted to look at too, just to see how it finished too, was the US dollar, right? So that's a second day of dollar strength. That's another one too. We're at the highest point since April in the US dollar, and back above the 200-day moving average. So, it'll be interesting to see how this develops, in the next, coming days. Is this a false move that we're seeing in the dollar, or is this something? Notice that we're back in the value area for the year on the weekly chart, but the week's not over yet. So, the level to watch for the UUP, I don't have dollar futures on here, but 24.64. The euro, again, I know this is not what everybody is probably watching today, but I still think kind of interesting. You could see that the euro make an opposite move, and you could see that there was some virgin point of controls being taken out for the euro futures. But in any event, let's get back to equities. Again, I like to cover the macro stuff. If we look at the S&P for the day, notice that we had some. So when I gave yesterday's video, which was a briefer video, I talked about how we had a nice VPOC reversal, right? We reversed off of that. In the overnight session, we actually went a little bit lower than that. And where we are now in the S&P is having a little bit of a difficult time getting back into value for the week. Remember, the majority of the week up until Wednesday, we were in this grind mode, which we've been in now for a while. We're basically at 42.15, which means we haven't really gone anywhere in the S&P other than back and forth, since, for about 2 months now, right? So for this week, again, we stay concentrated on what the valuers are telling us for this week, because that's going to provide us with a signal. But we're below value, 42.18. Now, that could change tomorrow. Remember, tomorrow is quadruple witching. I'll try to explain that as I bring up the Qs charts, and we'll go over the Qs. But remember what quadruple witching is for tomorrow. A couple things to basically make note of. Number one, there's going to be a huge amount of volume tomorrow in every stock. So why is that? Why will there be so much volume in every name? Well, it's not just monthly option expiration. A couple big things happen, right? The futures will be expired. So the March, right? Yeah, the March futures, which they have already switched. I'm sorry, the June futures, which have already switched to September. So when if you're trading S&P futures, you're trading the front month, the front contract, which is September. But what will happen is all of the dealers, some of which are still holding June contracts, and they officially will expire on tomorrow's open. There's a reason why dealers sometimes let those futures run off, right? Because they're working in ARB, right? So basically all that retail traders have to know is there's going to be a huge amount of volume on the open tomorrow, because that is where they expire the futures, the index futures. So things like S&P, Russell, NASDAQ futures. What will happen is the dealers will be offsetting those expiring futures contracts with baskets of stock, right? So you'll see this huge amount of volume in the first 5 minutes, right? That is dealers placing what MOO orders, market on open orders. So again, if you're a retail trader, there's not much really to do, just to realize, hey, there's going to be a lot of volume. What I typically do is really not trade around the open, especially around quadruple witching, right? You'll see some a little bit of crazy moves, and you're going to hear people go on Twitter, oh my God, look at all this volume in this name. What happened, right? And that's on the open. So you'll see that in all the S&P, all the names in the S&P, the NASDAQ, and Russell, basically every name, right? Because all of that has to occur on the open. Right. So again, I know that's a little bit difficult to get your mind around, but when dealers unwind their June futures positions, they offset that with with baskets of stock. Remember, that's all that an index is made up of, is a basket of stock. I used to do this for a long time. I was a Delta 1 trader, meaning, whenever I'm trading something as a Delta 1 trader, if I'm facilitating a big order, like a big futures order, right? They're always sourcing the liquidity, right? So that's why the S&P futures are the most liquid thing out there, is because the basket of stocks that it tracks, right? There's so much liquidity there, as well as SPY, right? So all of those things, they all equal the same. If you trade the underlying basket of SPY, if you trade SPY, or if you trade futures, they're all the same. They're just different products, right? But they're basically one and the same. All right, so that'll be the open. Then the close will be all the indices rebalance, benchmark to the close. Now, the big institutions have been pre-positioning for that since the announcement last Friday. But the whole S&P index, not just the S&P 500, but also all the sectors, right? Especially like the equal weight sectors. All of those rebalance on the close, right? And also all the little NASDAQ indices too, not just the Qs. But they will also rebalance back to their benchmark weight. Some people ask me sometimes, well, what do you mean? So if you look at, say, XRT, I always look at this ETF, right? This is an equally weighted ETF. Well, if you look right now, things like Dillard's, ASO, PRTY, they are actually a bigger weight than everything else. Why are they a bigger weight? And why are some things like FRG, CRMT such a small weight? Well, because these things have gone down and these things have gone up since the last rebalance back in March. Right? So they're going to be rebalanced again so that they're basically all about the same weight. Right? So these things, as long as that there's long assets following this, will have to be sold, right? And these will have to be bought or replaced, right? Depending on what they're doing. Like Land's End is a serial underperformer, right? So this is just the retail ETF, but there's one of these for biotech. There's one of these for home builders, I believe. There's XHB. So there's all of those. In short, there will be a lot of volume tomorrow, right? And the majority of that volume will be because of futures expiration that happens on the open and the index rebalancing that happens on the close. All right, so I just wanted to mention that just so that you have some also some wherewithal about what's going to happen tomorrow. And then also, things like all the SPY and the sector ETFs go ex-div tomorrow. They always do that on quadruple witching. All right. So we went over the S&P, NASDAQ, right? We talked about how we got into top of value, right? As a bounce point. I put this on Twitter yesterday, and look where we bounced, right? So we managed to do this and just basically take off like a rocket on the top of value. If it would be nice if every day this kind of happened, but this was pretty sweet. So we're out to new highs, right? In this, right? Now the small caps did take out a VPOC, right? Here's the VPOC from last week, but we're a little bit more challenged. So again, not everything is so easy, right? If we look at the overall breadth, before I get into some individual names, right? But you could see the declining names in the Dow, 18 versus advancing 12. S&P 323 declining versus 181 advancing, and NASDAQ even more so, right? So this is what's known as pretty bad breadth. You could see this on the left of my screen too. There was more things that went down today than went up. Now, what was particularly noticeable was that there was a lot of growth and momentum names that did very well. So if you've been in those names, congratulations to you, right? Those things took off. If you've been in a little bit more value or even a diverse basket, it may have been a little bit touchy today for you, considering the market breadth, right? That's how it was for me. I'm not all 100% into growth, so I had some things that worked pretty well. we also put on a couple newer trades that worked pretty well, and did some day trades today too that worked pretty well. But I'll tell you, I'm not one of these people that are doing cartwheels right now on Twitter, because I've been in more of a diverse basket. Not just today or the last week, but I've been going where there's momentum. So I got caught in a couple things today, and I'm always in these videos. I'm as transparent as as possible, right, in terms of what I'm experiencing. And I didn't think today was particularly easy, because I haven't been all in growth. So I actually got stopped out of some things, which is fine. I actually want to be I actually want to be slimmer going into the last couple weeks of June anyway. I just wasn't expecting to get stopped out in a few things today, but this is tough, right? Oxy was a beautiful move yesterday out to new highs, but this thing's down 7%. So some of these areas really got smoked pretty decently. So let's talk about them first. Financials breaking down. So does this mean that when you see something like this, right, when you see financials break the 50-day moving average? By the way, this is very important in terms of trading, right? We talked about this pre-market. A couple of people asked me about the financials, what I thought of them here, and I said, well, they're checking into support. Let's see if this would be a logical place for them to bounce. They did not bounce. They got absolutely run over. So, using stops here is very, very important when you trade. Outlining where you're going to be taking targets, what your stop price is, and then placing alerts, because this is really fast action that has been happening in the market. So if you don't have alerts in place, that something is going wrong, and if you notice these things, by the time these things are making their low, you're going to have a hit to your P&L. So the more thorough that you could be, setting alerts, I always set alerts on, if I got into a new swing trade, I'm not only putting out an offer to sell some stock, but I'm also putting an alert downside in case something goes wrong, right? I don't like surprises, and this is pretty tough, because by the time it's an hour and a half into the day, it's too late. So you really have to be a bit quicker than that. And this started off quite as a normal day. This really on the open, it was just a mass exodus out of XLF. Now, again, this is contrary to what we've been seeing in speculative option flow. And the reason why I call it speculative option flow is because it is what it is. We've actually saw some bullish positioning in XLF. Not the biggest trades in the world. They were more those speculative calls, but no one ever highlights when the flow is wrong, right? So they were positioning a little bit ahead of FOMC, buying some out of the money XLF calls. They got it wrong, right? So I say this over and over and over. When you're looking at option flow, some of it is going to be right, some of it is going to be wrong. It's just how it works. You have to have another system than just option flow. I don't care how aggressive, right? Everybody likes the sweeps, right? When things are bought above the ask. I see it happen on both sides, right? But there's a lot of people on Twitter that only highlight the ones that work, right? Because they're selling a service, right? And they're not being honest and upfront to be, that's my opinion. But some of them work, some of them don't. And you could really end up if you follow option activity, every trade that you see that's aggressive option flow, you're going to get run over. That's just how it is over time. I'll tell you, I've been doing it for years. Doesn't matter how aggressive. Well, maybe they weren't bought. No, they were bought. They're just wrong. And I'll tell you why, really briefly. If they were all right, what do you think hedge fund performance would be? Right? They would be outperforming the S&P every year. And I could tell you, look at the hedge fund performance every year. The majority of hedge funds do not beat the S&P, right? So that's their flow that you're watching, aggressive flow that you're seeing. So, a lot of times it does work, right? And a lot of times, it'll be a pretty good signal, especially when you see, repeat activity and accumulation and so forth. But you really have to, I'll use Fed Powell's saying yesterday, you have to really take it with a grain of salt, that a lot of times they're going to be wrong, right? And what happens is those who are peddling option flow on Twitter, they will never mention. They just won't ever repeat the flow, right? Though some of these guys will put out 20 different option signals a day, right? And they'll retweet the ones that are winners. So they'll take those 5 or 6 and they'll retweet them over and over and over and say, "Oh wow, look at this," right? But the majority of the other ones they won't. So that's my little spiel. I probably say this about once a month about option activity, that you really have to be careful. Because they'll just never mention it when the ones that don't work, so it's really one of the craziest things I've seen on Twitter. Well, maybe not the craziest, one of the craziest things, but I really don't understand why people aren't more truthful about option flow and about hedge fund performance, and they really don't work. But I get it. People are selling memberships, right? I do that too. I have a service. I sell memberships too. But my basis is to really be honest and upfront and tell people how hard this game is, right? And how much you have to work at it. Because it is, right? If you want to make it in this game of trading and do this full time, this is not easy stuff, right? It could be very stressful some days, and frustrating, right? This week for me, even though we've seen a lot of things blast off to the upside in terms of growth, I think is wonderful, right? But I haven't been, it's if you've been in all growth all year long, you've been suffering. So, anyway, I'll move on from this conversation. But, I do think, going back to our little spreadsheet over here, I do think you really have to be careful about, holding on to things too long. I mean, look at this XME, down 5.5%. Also breaking the 50-day moving average. This thing has been above the 50-day moving average now, since all the way back in last year, right? Every time it's hit the 50-day moving average, it's held it. So something different is going on here. And, if you want to look at the value versus growth, I think what you're seeing here is just a rotation out of value. But this market has not been I think previously what we've seen is, the market goes up and you're finding the outperformers, right? Well, I think, right now we're seeing just a lot of rotation where some things are really getting hit pretty hard as they rotate out of them, right? Right. So we talked about XLF. XLE actually held in there, down 3.4%. What else got hit today? And then I will go over, where those positives were. Yeah, I think the banks, OIH, which had a nice candle yesterday, again, so another value area that really got beat up, right? And that's on the bottom of my spreadsheet here. I should have just been looking at it this way. But yeah, a lot of metals. Now, what did well today? Well, another big day for software names, another big day for solar names. That was your best performing group. The TAN ETF was up about 4%. This run continued to run. ENPH also back above all these moving averages. I'll tell you, it doesn't look bad, right? But maybe back in this range. So I did not put on anything here in this space. What I thought was particularly interesting is what we talked about yesterday, Amazon. So I did have a trade for this. I mean, up 74 points. We're going to be at a very interesting area here in the Amazon weekly chart, right? So this Amazon weekly chart, 35.17. You've heard me mention this level before. This is where back in April, right? This is basically the last time that I've mentioned Amazon. Is back here where we stalled out and was a high of 35.54, but we did not close above the value area. So again, these value areas are really important to me. Volume at price, right? Let me turn on the volume profile. I do this just about every video. But you could see exactly where where we're deriving this value area from. It's all the volume from last year, right? That's what makes up. So it's a statistically significant area, and yeah, I mean we're going to have to get over that level. So it's going to be interesting to see if Amazon can break out. Let's talk about another one that did break out. That was in a range for a while, right? NVIDIA. I got long this name in the TTG Trend Portfolio back on, I think it was the 28th of May. So here's your sideways action for a little bit. Gave you a little bit of a false move here. Another false move here. Check back into the top of value, and this thing has been absolutely on fire, right? So huge, and I'll continue to be long here. But another big day, and look at the volume for Nvidia. Now AMD finally caught some interest today, but I'll tell you, this AMD, whenever it seems to do this, it's bent more for a day trade. So we'll see. Maybe AMD can get some follow through activity. It was pretty coiled up here a little bit. There was some tight consolidation, but you look on this chart. Every time there's been a green candle, what has happened? There's been very little follow through. So I would lean on that previous history to say every time this AMD has had a big green candle, it's faded. Right. I mean, there may be a couple exceptions. Maybe back here it threw in a few days of rally, but it's been very difficult. This stock has not acted like it did, certainly back here. Right. So we'll see. Maybe this thing can, be something to watch for tomorrow. Maybe this can get going a bit. Right. So that's AMD. If we turn over to the software space, Shopify did take out this VPOC up here. So huge, absolutely huge move this week, right? Ginormous move. BIL was one name that got a nice, talk about putting out an upgrade the right day. Bill.com, which we went over pre-market, had a huge move today, up 6%. And if you look at some of the other names that I was highlighting here, let me just zoom out here for just a second. But Net continues to run. I mean, out to new highs in this one. Extremely impressive last couple weeks. Crowd had another nice day. That's almost out to new highs, right? Gave a little bit of shake and bake just about a week and a half ago on earnings. And since then, it's been strong to quite strong. SE out to new highs as well. That is those two names, Crowd and SE. I've been long in the TTG Trend Portfolio for a while now. I made no changes with Crowd and SE. Even though these things kind of had a little bit of difficult issues this year, but another nice performer. A few other ones that kind of caught my eye today were Twilio had a nice day. Monster Day up 8% today. TTD, which had their split today, could be interesting, right? So we'll see. It's still below the 200-day moving average, but here's your split and a nice move. I know that the performance is wrong here because Thinkorswim is having a difficulty, calculating it. The medical devices were very strong today too. Remember, there was this big outflow that I talked about on Twitter. There was the biggest outflow that IHI has ever seen, the medical device ETF, and look at how it's recovered since. So really nice. Someone I think made a pretty bad sale, but they wanted to get into something else. They actually went into financials, I believe. So that really didn't work out too well for them. Talk about another institution that did not. Their timing wasn't perfect. CPRT. Right. This is Copart. Right. This is also a name that we added to the TTG Trend Portfolio. Looking pretty good here. Made a nice move out of value. Match.com is another one too. First move out of value. So, when it's the first move, right, this is a pretty good looking chart. Made a nice move. 146 can be your stop, but impressive. Cintas is a name I went long at the end of the day. Very coiled up there. So again, I'm not jumping 100% into growth. But I like this chart a lot. I like Cintas a lot. This has tried to break out of value, but I'd like the tight consolidation, and maybe we finally see this thing start to get going now that people are back to work. What was it? There was another name too that I wanted to mention. Oh, so again, something different. I try to find some things that are a little bit different. I would keep your eye on Costco, right? Very close to breaking out. out of this value area. Look at all the consolidation that's been going on back and forth. 386. So it looks kind of bottled up to me. I started a position, right? I've been doing that. I'm kind of trying to tweak my trading plan a little bit. Sometimes when I wait for confirmation, I'm chasing because it ends up being such a big move. So I put on a tiny starter just to kind of have this, just in case it does move. Now, again, if it breaks the wrong way, I'll have to, get out of that starter for a loss. Right now, no signal, so we're waiting for a break of value on that one. All right, so the video is. Let me bring you over to the trades, because I always mention the trades every day. Here's what I did. Pins was another one. A couple of things I was just looking for. Some scalping opportunities. That was a day trade for me. I traded that right up to this VPOC. I actually took it off a little bit shy of the VPOC takeout, but that's all I was looking for pins, which speaking of call activity, we did see some call activity the last couple days in that one. All right, guys, I will leave it there. Have a great night. See you tomorrow.